Alrighty, welcome to the Hurley Investments midweek commentary. I'm going to let you guys know this is probably going to go an hour and this will go an hour and 15 minutes today. So I'm already planning on going a little bit longer than expected. I've been out trading, so I'm going to stick with my choices because I think the choices we have are extremely important to where we're at right now in our stock market and why. So if you don't mind me asking, if you're looking at our stock market, what are you thinking right now? What are your thoughts about our stock market today as it sits? Give me a thought process here. I wish I understood it. Dan, I am so glad you said that. Up, up, up with few stops. Now, Abraham, I don't quite see that. In fact, our market is the same it was like 14 months ago. So, politely, I don't see that, but that doesn't mean that that's not what's happened the last couple days. And then, Kevin, if you look at it a shorter term, that's exactly what's happened. Up, up, up with a couple stops on the way. It's interesting because we're all looking at our stock market a little bit differently. And we're looking at it going, I wonder what's really happening out there. I wonder if I understood it. And Dan, I appreciate the way you said that because in all honesty, I was out in Denver last week and hold on one second, guys. Jeez, can you guys hear all that? All right, sorry about that. Did you guys hear all that? No? Good, thank goodness. Okay, on my side, I had a plug-in that came in from a CNBC that was reacting really ridiculous. So I apologize. I was having static and an audio feed come through. So I do apologize. Okay, pretty interesting. Getting back to what I was trying to say, just noise. Sorry, Abraham. In my travels here in the last week, I had someone ask me what was going on. And I politely thought I said, I'm not really sure. And the comeback was, well, if you don't know, why would we ever use you as a money manager? And I sat there and I thought, well, I can see where you're coming from, but why is that so important? I couldn't understand why that was so important. And I politely said, because I don't know what's going on, is the reason you should use me. Because when someone doesn't know what's going on, they're not making stuff up. And they're protecting. Now, the market before today was down about 2.75%. Anyone down in the stock market this year? Anyone down in the stock market? No one wants to say anything, huh? I've met a couple people that are down, and down significantly. But I do know, if you're down, are you making anything to the downside? And if you are making anything to the downside, are you able to convert those into shares? That's what's going to be the difference. Dan made the comment, you're flat. So Dan, are you making anything to the downside on that flat market? If I can ask you. Lowered cost basis on anything? Have you been able to add any more shares to anything? Yes, that's probably why I'm flat. Perfect. Guys, the real issue here is to not lose. And when I say not lose, not to book a loss. At all. And when I say at all, I mean at all. And someone says, well, Kevin, you know, my account's down. That's okay if your account is down. But if you're booking losses this year, there's something that's not, there's something that you're missing. And how'd I say it? And it can be a make or break kind of year for you if you're not getting it fixed. Our market is doing something it hasn't done in 20 years. Anyone read this article? Anyone read the article? Anyone know what our market is doing that it hasn't done in 20 years? Not yet. It comes down to Bollinger Bands. And the Bollinger Bands are the tightest, if I read this right, Bollinger Bands, since volatility on a monthly basis has been declining precipitously, the market is trading close in line with the recent average prices. Bands recently have a width of 12%. Band has a width of 12%, which is the narrowest they've been since 1995. There have been 3 other periods when they've been this tight: 1977, 1960, and 1948. Historical reaction to these conditions is mixed, but when this happened about 20 years ago, the S&P found itself 23% higher in a year's time. Now, I appreciate the candor, because in real life, who cares? And I know that's a bad way to say it, because it doesn't guarantee anything, but who cares? So the Bollinger Bands are trading within a 12% range, which they haven't done besides 1995, because that doesn't mean that we're going higher or lower. It just means what? What does this whole article mean in real life? What do Bollinger Bands mean? Interesting data point, but what does it mean? Pinching of the Bollinger Bands. Low volatility. It means a breakout, but we don't know if it is going to be higher or lower. Means a lot of nothing. Means a whole lot of nothing. We're going to have a breakout, and I'm going to be honest with you, after 6 consecutive quarters to the downside on the S&P 500, with a stronger dollar and a big risk of the Fed raising rates in June or July, a sell in May attitude, the slowest volume trading on the S&P 500 yesterday or Friday of last week, I just don't see a 23% upside in our future. You know what I do know, though? If we have a 23% downside, I'm going to make up 20% of it. I know that if things go haywire, I'm going to be okay. And I do know that if things really look ugly, I'm not too worried about it, because that's going to be pretty easy to follow through and to be okay. I'm going to survive it. I'm going to survive with the ability to add more shares when I need to. I don't know everything. But the neat thing is, if you're collar trading, you don't need to know everything. It's not important. You just got to be able to protect. And you'll know when you need to protect, because you'll see things starting to fall like there's no tomorrow. All right, out of curiosity, what's happening this week and why? What's happening this week and why? What is happening out there in this week and why? Well, start off, what's happened so far? Let me do it this way. What's happened so far this week and why? What's happened so far this week and why? There you go. New home sales came in at 619 versus an estimated 521. Very flat, lowest volume S&P 500 day on Monday. Anything else happen? Abraham said PMIs. So PMI overseas numbers. That was for Germany, France, the European Monetary Union. Fed meeting. When's that happening? When is the Fed meeting happening? Tomorrow? Don't think so. Fed meeting should be happening in 2 weeks. Yeah, I thought the Fed meeting was in 2 weeks. Not this week, not next week. Friday. No, Yellen speaks on Friday, but it is not the Fed meeting. Fed meeting is in 2 weeks, I thought. 2 weeks from Wednesday. But Dan, I have been known to be wrong before. Let's hope I'm not wrong right now. Let's take a quick check. Janet Yellen speaks. That was on Friday. Speaks at Harvard. Not too important. But I thought we were in June. And it's usually the second full week in June. Yep, FOMC meeting is the second week of June. That's June 15th. And then the following week, we have the Grexit that comes out. And I thought that was on Thursday the 23rd. So good to be aware of what's happening in the future. But right now, and we'll just put this up here, right now, important dates are June 13th, FOMC meeting, and June 21st, possibly, don't have that confirmed, Grexit. Euro. So, important dates to know, and that's a good way to keep your, literally keep your finger on the pulse of the market. But the reality is, nothing's going on. And when I say nothing's going on, I'm going to bring in a little bit, and I'm running a little bit late today, so I'm sorry. New home sales. But then on Wednesday, let's cut that out of there. So we're going to jump around here. New home sales, Wednesday, we have MAB and Fed crude. We have the FHFA Housing Price Index. Thursday, initial continuing claims, and this will be a mover. Durable goods and durable X transportation. Pending home sales. And then Friday, the big kicker, which is probably the down day, because we're going to have very little volume or market movement. GDP, second estimate. We have the GDP deflator. We have the Michigan sentiment. Nothing's really going on. Well, let's take a quick look at earnings. And we got some big earnings, right? Well, AutoZone happened today. Best Buy happened today. And Intuit happens today. Kind of funny. Bigger one tomorrow. I have Costco, Hewlett Packard, and Tiffany's. Then we run into a bunch of probably expected to be crappy ones, right? Abercrombie and Fitch, Burlington Coat Factory, Chico's, which hasn't done well, Dollar General, Dollar Tree, and GameStop. And then on Friday, we've got Big Lots. So nothing's really moving right there for earnings. How about internationally? Today, the big mover, France business climate. No one really cares about France. Nothing's happening on Wednesday. Thursday, semi-important. We got the Japan CPI numbers, and we have Great Britain's GDP numbers. Not that it's going to give us a tell one way or the other. Friday, we have Yellen speaks at Harvard. And on Sunday, we have the Japan retail sales numbers. It's kind of a slow week. The important thing to remember and to keep on those notes, Monday next week, the U.S. stock market is closed. Expect Wednesday to be the last average volume day of the week in the stock market, and which is scary because, again, I read this article about how the stock market had its lowest day of volume on a Monday ever. Rather interesting in where we're at. Alrighty. Where will the markets end this week? I'm not counting a whole lot, so I'm going to say lower again. We're still following our trend, even though we had a great yesterday and today. I expect ourselves to go lower. And I'm just looking at lower because because that's the way the trend has been for the last 4 weeks. You know, it's been a 4% down month or week, so to speak. Let me find my screenshots here, because I saw some very interesting come on. I'm at the office today and my computer is ridiculously slow, as always. Sorry, guys. Come on. I thought I had taken my pictures already. Sort by. Here we go. So, I found it rather interesting. Come on. Alright, I'm going to cut these out and get them pasted in different areas. Killing myself today. Ready to have someone else prep all my slides. All right. Look at where we stopped on the Dow Jones Industrial Average today. You know what? Before I even do that, are we bullish or bearish? Bullish or bearish? What do you think? What do you think? Bullish, bearish? Long-term bullish. Okay, but we're going shorter term. If we're looking at this chart, it clearly tells us bullish or bearish. Bearish. We don't have our crossovers yet. We're close, but we're still bearish. Where did we finish today at? And I know that's kind of a loaded question. But it's an important one. Right at the moving average. In fact, we closed at 17,706 with our moving average, the 50-day moving average being at 17,707.73. We didn't break above the 50-day simple moving average. which I want to say it's kind of a bummer, right? But it's more than kind of a bummer. It's kind of, yeah, not going to happen. It was a downer today. That we had so much upswing, but heck if we couldn't beat it. Now, good news, our futures were up at the close of the market. Doesn't mean anything, only up 20, S&P up a tenth of a percent, up 2.25, NASDAQ up 7, but we're right at the precipice of getting over that freaking 50-day simple moving average. So close, but we're not there yet. So, very close to turning bullish and breaking the 50-day simple moving average. A couple weeks ago, I had the talk with you guys in the chat session, and someone said, "Well, we're bullish," and I really think this was back. This was right at that level. I said, "No, we're bearish." We'd crossed over. Our 5 and 20 day we'd crossed over. I said, "No, we're bearish." And the comment was, "Well, if you say so." And we went from 17,900 down to 17,300 for the lows. And I said, no, it's not that I said so, it's what the chart tells me. It's what it is. I'll take it for what it's worth. I'm going to take it at face value. With that said, we have a whole different story on the S&P 500. If I'm telling you to look at the S&P 500, what are you going to tell me? What would you tell me looking at the S&P 500? More bullish for sure. In fact, I'm going to pop open our charts. There's the Bollinger Bands. Kind of hard to see everything, so I'm going to go to a 3-month chart. I'm going to shorten it up. I'm going to update this, and let's take a look at a 3-month chart. Well, we got our crossovers. We're not quite crossed over, it looks like, on the MACD. Close. So let's bring it in even a little bit different. Let's bring it in, and let's shorten it down to a month. Keep our candlesticks. We want to see the landscape portrait, and I'm colorblind, so let's take a look. You know what? We don't have our crossovers on our 5 and our 20 or our MACD. We're close. We're super close. But we're not there yet. We don't have everything we're looking for. So our comments are going to be, close to going bullish, but not there yet on the 5 and the 20 or the MACD, but we bounced higher. Nope. But we broke above the 50-day simple moving average. Now, kind of interesting, this is just for the first time though. One day does not make a trend. And if one day does not make a trend, we need to understand we still have risk to the downside like we do the upside. But we now know that we have at least an institutional level at 2062 where we'll probably see some institutional buying to hold that level. And then when you look at the NASDAQ, it's all kinds of crazy. But the short answer is simple level one, right? Crossover. We have a 50 and a 200 day. The slightest of the crossovers right there. Probably need to go to a 5 and a 20 to verify this one as well. But we got them. Taking a peek, shortening it down. Got our crossover, got our crossover, got our crossover. Technology is going bullish. I can't believe I finally took off long puts on Apple. We've got some movements up higher, and from this point, a good 90 points up to the high side is where we can go. Might have to test that 49.50 or the 5,000, but we're looking at 100 points, 90 points to the upside. World S&P in May 2016. I'm sticking with my down 2.5%. I look like a genius right now. I wonder if we'll make it up the last little bit. Looking to trade. So I guess the short answer is taking off some long put protection, especially on bullish tech stocks. Still looking to sell premium, and I'm still getting ready to sell some short puts on those covered, on those long puts. Some of them I'm not ready quite to take off all the protection. So not much has changed just yet, but I'm definitely looking at it and definitely considering or making sure that I'm doing what I need to do to be in place. Alrighty, I'm going to make sure I save this. Alright guys, any questions for me? Any questions for anything you guys want to go over? I thought I'd take a little bit longer, but I decided to shorten down some of my my comments about my travels just because of, well, just because I'm just going to keep it quiet. How do you see your current portfolio components? Abraham, I still like them. And when we're going to go through that, let's go core portfolio components, right? Everyone know what they are? Apple, Baidu, Disney, Visa, Ford, and Nvidia. And if I was to look at these, 750K or higher literally sits in Apple, Baidu, Visa, Disney, and I'm moving money over to Facebook, looking for a bank stock to insert to the portfolio. These aren't going to change a lot because I did my research at the beginning of the year and we're not running into a big issue, so to speak, with a bunch of volatility. So 250K to the 750K is running in Disney, Baidu, Apple, Visa, and looking to move out of Apple into Facebook. And then the 250K or less have been primarily stuck in Ford, Nvidia, which really make us look really good, SanDisk, Bank of America, which I'm kind of iffy about, and or Zions Bank. And what's my last one? What is my other one? Crying out loud, Hurley. Where's my cheap one at? Duh. XLF. XLF is on, is $21 as I played it this year. So those are my core components for the smaller positions. Abraham, you asked, I still see this as great. Baidu, I've done a killing on lowering cost basis, and Baidu really made my portfolio last year. That was perfect for me. Apple, I'm trying to move out of Apple and get into something like Facebook that moves more like Apple used to. I really still enjoy Disney and Visa. I think Visa is my recession slash interest rate hike play, and Disney's people are gonna pull their head out eventually. Fabulous earnings, nothing really to worry about. Ford, value trap, but I've been in the trap forever. With so many shares added to Ford, Ford gets up to 1750. We look like a genius and we're doubling portfolios. Nvidia moves significantly. I'm going to have to roll short calls out and up just to uncap me to the upside at the $40 range. So good positions to be in. The XLF is the S&P banking index. Zions Bank is a local. Bank of America, I've gone over Jeffrey. SanDisk is just a covered call strategy. Nvidia's moved like there's no tomorrow, and Ford for the $250,000 or less, kind of sitting where it is. It'll be an interesting play when we see things move towards the end of the year. The one that looked best to me now is Wells Fargo. Wells Fargo, actually, Abraham, to me looks like the worst. And the reason why I'm saying that is because Wells Fargo primarily is into new home sales. And new home sales, as I looked at them, have been mostly down for the year. I understood Wells Fargo gets most of their money through the mortgage industry. If I was looking at a bank, my top three would be a regional like Zions Bank, because it can go from 26 where it's at right now all the way back up to 34, 35. I'm looking more to Goldman Sachs or a Morgan Stanley that just hasn't moved as much as it should, kind of like Citibank too. I do know Warren Buffett is in Warren Buffett is in Wells Fargo, and maybe a steady Eddie is the way to go, but I don't know. I don't see an explosion in home sales coming in the near future. Interest rate hikes are where you're going to make your money. I would be choosing a Visa, a Morgan Stanley, and those are the charts I'm looking at. That although it has gone up there in April, but that's just April. Maybe maybe I'm missing the boat on this one. Inventory's going down. After March looked not so good, February was okay, January. I haven't liked the home sales numbers, but as I'm looking at them, it's kind of because they're bouncing up and down. So Abraham, just my 2 cents. Dan Allen, I was called out on video. Should I wait to get back in for a pullback? Yes. NVIDIA doesn't get treated fairly, so I'm looking at also, for the most part, playing NVIDIA directionally on crossovers for the next little while, because I'm going to get called out at 40 here unless I move it out and up in time. Not sure if I'm willing to do that. Might be a good time to book my profits and get into a bank. Abraham, but it doesn't have good potential since the good part is in loans. But loans are slowing down, Abraham. For Wells Fargo, loans are slowing down. As we take a look at our pending home sales, December they were lower than expected. January they were lower expected by 3.2%. Came back in February 1.2. March are down 1.8. Huge jump in April. The home sales for new homes is slowing down. If we went to pending sales, let's take a quick look at pending sales. And we're obviously not doing any more refinancing. They don't have the pending sales there. Pending sales I thought was also going down. So let me take a quick check on our last pending sales. Our last pending sales, was up last month, 1.4 versus the 0.3. So April is better. Existing home sales was just in line. Pending home sales the month before, 3.5. But those are pending. We kind of want to see existing home sales and new home sales. So it's existing. existing and new, and they just haven't moved the needle. Again, tough beat on Wells Fargo. Check it, terrace.com. I will do that, Abraham. Any other questions? Good ones to bring up. Loved them both, Abraham and Dan. And Dan, if we can take a quick peek on why I told you probably want to wait for a pullback. Come on. So bringing up a chart here. Look how oversold we are on NVIDIA. And it stays oversold for a while, but I'm sitting on $40 short calls out to January 17, and I haven't found the gumption to move them because they're so oversold. Excuse me, overbought. Take a look at that green line on your RSI. So Dan, that's the pullback I'm waiting for myself to roll some short calls that are at $40, 10%, 12.5% lower than where it's at right now. But I'm expecting some profit taking. It's been forever since NVIDIA's got up to 40. And I kind of think some people aren't sure what they're going to do with it. Alrighty, any other questions? These are good questions today. If not, let's if not, we can call it a day. I'll work on getting this all put together so you guys can have it here on tomorrow. Guys, I appreciate your time. You guys have a wonderful holiday weekend. Don't forget, in fact, if I can make this comment on trading, if you're looking for a credit spread to expire last week in May, which is like the June 3rd, I'm looking to put a credit spread in towards the end of Thursday. And because I see us going a little bit higher, I really like our 660-ish, 650 bull call again on Amazon. The one we did a couple weeks ago. I want to follow that one more time and see if we can't do a bull call spread on Amazon using that 660 support level. When do I expect interest rates to go up? In all honesty, Abraham, I thought they weren't going to go up till December. And my thought was that we're not going to increase the rate of interest we want to pay on our loans moving forward, especially since we don't have to, especially since that brings back a stronger dollar. With all that said, I kind of got taken by surprise with how it seems like the freaking Feds want to raise rates. So my expectation, Abraham, was that we would not have a rate hike in June or July. I was thinking December again. And boy, does it sure look like a June or July is on the table right now. I can't believe how hawkish, especially last week. Seemed like all three Fed voting members that spoke were talking about raise rates. So I would have thought December. I thought we wouldn't cost ourselves more money and interest moving forward. I thought they wouldn't have done it until after the election. I didn't think they wanted to be part of the election. So my original call is December, and I think I may be proven wrong, which would surprise me. Not that I haven't been proven wrong, but dang it, I just don't like it. What about oil? Oil, I think, is heading back down to the lower levels, so expect oil to head farther, lower, quicker. It's going down. All right, guys. Hey, you have a good one, and I will look forward to seeing you guys next week. And next week will probably be my last one for a while. I've got a busy summer, so you'll just have to notice as I get these things posted, trying to post them most Tuesdays, but there will be a lot of Tuesdays that I will not be posting because I'm just off and about. So just a heads up, looking to be quite busy throughout June and July. You guys take care. Have a wonderful day. Bye-bye.